All right, good afternoon then, folks. We are at the beginning of another week of trading on Monday, the 11th of March. We'll have a flick across markets and see what we expect in the upcoming week ahead, with some pretty key inflation reports out of the US tomorrow, and then some UK figures on tomorrow and Wednesday as well. So yeah, I mean, outside of the UK and the US, really, there's not a lot to go off across any of the other major economies. But we'll start back to last week. You can see a lot of downside, a pretty heavy downside across the US dollar over the course of last week. You can see Aussie, Kiwi, Euro, Sterling, dollar Swiss, dollar CAD, dollar yen, and then obviously the price of gold as well has rallied pretty aggressively over the course of last week. Or the dollar has sold off. These four have rallied, and the gold has rallied, and then obviously these three sold off. Pretty broad-based US dollar weakness off the back of some comments from Jerome Powell testifying in front of Congress, suggesting that, I mean, obviously we know they're at the end of their hiking cycle. We've known that for a while, but did say that interest rate cuts are around the corner, and they are very nearly at the point in time where interest rate cuts are important or are approaching, and also said that the central bank do know or do understand the risks of keeping interest rates where they are at for too long, which again is another comment from him saying that they want and need to get things down. You can see then equity markets off the back of those comments rallied Wednesday, Thursday, but downside off the back of that NFP print. NFP itself was largely strong, but unemployment rate ticked higher, some downward revisions to previous months, so negative jobs report from the US, and that was the downside. Previous data releases, I mean, the initial reaction was a spike higher, as you can see in this little move higher post NFP, but after that got sold back into, maybe markets waking up to the fact that rising unemployment isn't so great for the US economy. Bond yields a bit all over the place, just kind of chop sideways. In 2-year kind of grinding a bit back higher at the moment, but not much to see there really in terms of bond markets. Aussie yen pushing lower. Again, that can be a bit of an Australian dollar move, but it's not. The Japanese yen across the board strengthening due to the fact that you've had a number of central bank officials and ex-bank officials saying that interest rate hikes are imminent. The exit of a near decade-long stint of negative interest rates is fast approaching, maybe even as early as April. So interest rate hikes on the cards for the Japanese yen, and that's certainly a situation where the Japanese yen is likely to strengthen. Bitcoin up past 70k, sustainably above 70k for the first time in its history. It did pop its head above 75k on Friday of last week, kind of chopped a bit over the weekend, but as of this morning, into this morning's European session, did break above 70. It's now sustaining a move above 70. We are up above testing 72,000, which is not something anybody has ever said with the price of Bitcoin before. So where that ends is another question, but I think it just gathers more. I mean, it's gathered momentum for a while. How long that continues is anyone's question, but there's nothing up there to suggest it will stop. The trend is still intact. I think you've got to buy it, and it'll be interesting to see how far Bitcoin can really get above that 70,000 round number. Into this week then, the economic calendar. Clocks changed in the US, so data prints are at 12:30 from the US today, and or tomorrow should I say, and then on Thursday as well, PPI and retail sales, Michigan consumer sentiment at 2 o'clock on Friday. So got to keep that in mind for the next couple of weeks. US data prints will be an hour earlier than what they usually are, and also then that brings the US open, cash open, to 1:30 p.m. in the trading day over this side of the world, which is actually quite nice for us for a couple of weeks. The fact that it opens a little bit early, you get a bit more time to trade it throughout the course of the day, not more hours, but it's just early in our day, so obviously we can't work for 18 hours a day or whatever it ends up by the time the US markets close, by the time we well, not 18, 13, 14 hours by the time markets close, by the time we or from the time we are up and at it. But CPI tomorrow, right? Core CPI and then actual CPI. Jerome Powell last week saying that they do need to see a little bit more progress on inflation, and that little bit more progress on inflation will be the trigger point for them to go and cut interest rates. Inflation then a week after those comments are still fresh in the mind, and you've got to sit there and hope for weak inflation prints. Strong inflation prints, just that'll be a bit of an annoying trade. I mean, what do you do in that situation tomorrow? It's certainly not what I will be hoping for. I'll be sitting there hoping for lower than anticipated inflation. That gives us some tradable opportunities off the back of that. What that means for stocks, I mean, it probably means stocks higher, but certainly means the US dollar lower. It's a pretty easy trade off the back of that. If it comes in higher, gets a bit messed up. you take his comments into consideration last week, higher than anticipated print this week. I mean, what do you do in that situation? Ultimately, they're going to cut interest rates very soon. Does this prolong it by a month or two if it comes in high? You got to sit there and you got to hope for figures below consensus. If you get figures below consensus, stocks may be a little bit tricky. Yields lower, dollar lower, should be fairly easy trades. As I said, off the back of that then brings us into PPI on Thursday, and again you're going to be hoping for negative prints. Coming to retail sales, then on Thursday again you're going to be hoping for negative prints, and you're just with the comments from Jerome Powell last week. Any US data print, you've got to hope for negativity off the back of that, as that will likely cause the most predictable and easiest to trade moves over the course of this and the next few weeks. UK unemployment rate not expected to change. No expected change off the back of that. A number of investment banks, and a number of funds over the last number of weeks and months have gone and prolonged their forecast for the interest rate cut from the Bank of England, and not exactly in the same situation in terms of inflation as the rest of the countries. They do still need to get that back down. Although Andrew Bailey has suggested they don't quite need inflation back to target, they still do have a bit more work to do in order to get that back down. A lot of market participants seem to think we may get a cut in Thursday in August of this year from the Bank of England. That is later than the rest of the major central banks. So you're probably, just judging off the fact that you've got all these US figures, you're going to be hoping for weakness. You probably hope for a lower than anticipated unemployment rate. Anything below consensus, give a bit of positivity to sterling. From some GDP figures, maybe above consensus, give some positivity to sterling, and that might make sterling push higher. Long cable off the back of that, and some negative data prints should be a fairly simple trade. But off the back of these data prints, dollar yen is probably the method of choice. I mean, with the Japanese approaching ending in the negative interest rate cycle, and needing to hike interest rates at some point upcoming, maybe potentially even April, that should cause pretty broad-based continuing strength in the Japanese yen. Some shorts on dollar yen would go in line with that Japanese yen strength, and then maybe a bit of a kick to the downside for the US dollar. So I'd keep an eye on dollar yen over the course of this week. Sterling yen, off the back of some weak unemployment rates, weak GDP figures against sterling yen, anything you can play Japanese yen strength on at the minute, I think is a good option. So we'll keep our mind on that. We'll keep our eyes on that. We'll update further as we get on through the week. But important week for the US. Inflation figures, consumer and producer, retail sales, Michigan consumer sentiment, the preliminary figure. So important week of economic data throughout the US. We will update further. You gotta sit there and hope for negative data prints, as that is in theory where the best tradable opportunities should come from.